Okay, good evening, and sorry, this video is a little, how do I put it? It might not be up to par because I had done this already, but due to power failure, it was corrupt, so I'm going to have to do this again. So I may not be as detailed as I was initially, but all the same, we're trying to give you as much value as possible. This video is based on a new strategy that I want to teach, and this strategy works on any time frame and for whatever kind of trader that you are. It doesn't matter whether you're a swing trader, a day trader, or even a scalper. It works on daily, weekly, 1 hour, 30 minutes, 5 minutes, even a 1 minute time frame if you are patient enough to put it to play properly. Okay, so this video is for swing traders, and there's another video for short-term traders, and I believe you will see that video. I've done that already. This was supposed to be the first video, but it was corrupt, so I'm redoing it again. Now, this trade has three things that you need. The first is a trending market. Okay, first you need to find the trending market. Just like right now, I am looking at the trending chart of Australian dollar USD as of today, 10th of 10th of September 2019. I'm going to close this so I can have more of my chart. So as you can see, we have a trending market. We have a downtrend that ranged for a while and now is resuming its downtrend. Okay, so how do I know it's a downtrend? Draw a line on your chart. Can you see the chart is slanting? That is slanting down. Then I have a range from between here to here, looking like an uptrend, but it's not a strong uptrend. And then it's resuming its downtrend now. You see, it's going back the way it was originally. So we have a downtrend resuming. We had an uptrend, and then we had a downtrend that went into a range, and now it's resuming its downtrend. Okay, so what are we looking for? First, we are looking for a trending market, which is what we have right here. Okay, and then secondly, we need two indicators. First is a moving average, a 60 moving average. So let me just write out what and what we need. Text number one, trending markets. I'm going to increase the size of that so everybody can see it clearly. White, Arial black, draw object as background. Okay. So, trending market, that's the first thing you need for this strategy. And then secondly, you need number two, you need a 60 simple moving average. A 60 period simple moving average. A 60 period simple moving average is the second thing you need for this strategy to be able to work. And number three, you need an oscillator. We need an oscillator. So you need an oscillator indicator, either RSI or stochastic. I prefer stochastic. So we're going to be using stochastic for this very trade. Sorry, let me edit that. Number three. Okay, so now we have everything we need. We know everything we need rather. So we know that we need a trending market, we know that we need a 60 period SMA, and then we know that we need an oscillator indicator like stochastic or RSI. So I'm going to stick with stochastic, which is my preferred indicator for this. So now we found a trending market. The next thing is our simple moving average. So I'm just going to insert a simple moving average, trend, moving average, 60 moving average. I prefer to use red. I'm making it a little bold so you can see it clearly. Forget about, ignore the levels, ignore visualization. It's always on all time frames by default, so stick to that. And then just click OK. So now we have a trend. So as you can see, we have a downtrend, then we have a range. You know how to identify a range now. When you see price crossing in and out, in and out, in and out of moving average, then you know that you have a range. You see it went in an uptrend, downtrend, uptrend, downtrend, uptrend, downtrend, uptrend, downtrend, uptrend, downtrend, uptrend, before it finally entered the downtrend. So now you know that you're in, this was a range, and now we're back in a downtrend. So how do we know that we're back in a downtrend? Number one, your moving average is above the price action. All price action activities are below the moving average. Sometimes it pulls back into the moving average, but not significantly, then immediately falls back below it. It pulls up again and falls back immediately. It pulls up again, falls back immediately. So if it doesn't pull up and maintain the top position for a while, then you know you have a downtrend. So right now, we know this is a range because when it pulled up, we had a few spikes up and down above it before it finally pulls down again. Went back up, played above it a little, came back, played below it, went up, played above, came down, played below. So when you see price playing above and below your moving average, then you know you are in a range. But when price goes above and stays above, you know, all the actions are happening above. Every time it comes down, it just comes down for a while and then jumps back up again. Then you know you're in an uptrend. The same thing applies for downtrend. When it comes below and you see that every time it pulls back to it, it either doesn't break above it, or every time it breaks above it, it just falls back almost immediately, then you know we are in a downtrend. Okay, so when price is below your moving average, you have a downtrend. When price is above your moving average, you have an uptrend. It doesn't matter the moving average you are using. You are using 14, you are using 10, you are using 20, you are using 50, you are using 200, you are using 1. Well, the larger the period of the moving average, the further the moving average will be away from the price action. Okay, so if you really want to determine the trend, then you want to use a very large moving average, like from between 100 and 200. If I use a 100 or 200 moving average now, let me just bring in 200 moving average for the fun of it so you can see. So to identify your trend, it's easier to use a large moving average. Okay, that helps you to identify a trend much easier. Let me use 200 and change the color to gold or something. Can you see that now? So you see that when you're in a downtrend, if you use 200 as your moving average, when you're in a downtrend, price is steadily below the moving average. It doesn't break above it. And when you're in a range, you see, when you see price crossing in and out of a 200 moving average, okay, this is actually a simple moving average. Let me change it to exponential. I prefer to use exponential for something like this. Good. So when you see price crossing in and out of 200 exponential moving average, then you know that you're in a range. If I were you, I wouldn't touch that market. Don't even touch it with a 10-foot pole. Yes, because you don't know where the market is going to go, whether it's going to end up going up or end up going down. This could actually have ended up as an uptrend and started jumping up, but it still came back to a downtrend anyway. But when you see price maintaining its position below a 200 moving average, then you are certain that you are in a downtrend. Okay, so having cleared that, let me take the 200 moving average out of the way so we can see our setup clearly. Alright, so the next thing we are looking for is an oscillator indicator, either RSI or stochastic, and I said I prefer to use stochastic, so I'm just going to bring in stochastic right now. Insert indicators, insert indicators, oscillators, and stochastic oscillator. So I'm going to maintain the default 20, 80, 50. If this is not your default, please set it to 20, 80, 50. Okay, usually you will have 30, 70, plus maybe 30 for 30, 70. So change the 30 to 20, just double click and type 20 there. And then for the 70, double click on the 70 and type 80. And then click on add and bring in 50. So I'm just going to remove this since I'm not using it. So click on add. If you didn't have this before, you click on add and you type 50. And that's it. Click enter. And that's it. So click OK now and it brings your oscillator in. So you see how our oscillator is very, very ugly, very confusing right now. We don't even know what we are doing. So that is because our chart is squeezed in. Okay, we are looking at, on a single screen, we are seeing from 15th of September 2014 to 15th of September to today, 10th of September 2019. That is about 5-year chart, 5-year movement on a single chart. That is a lot of work to display at the time. So I'm going to just increase this. Okay, and one more issue, we have the wrong chart type, so I'm going to change that to candlestick. Okay, I prefer to use candlestick, it's smoother and gives me better reading. So you can just use plus or minus to increase or reduce the size. Alright, now how does this strategy work? Number one, determine the trend that you're in. We are sure that we're in a downtrend because our prices activities are mostly below 60 moving average, so we are certain that we're in a downtrend. And then the next thing is we want to check our oscillator. What are we looking for on the oscillator? Usually when you're on the oscillator, they tell you that when you see a cross occur below the oversold area, which is below the 20 region, then you know that you're going into a buy, so you start buying up from there. And then when you get to the overbought area and you price and you see your moving averages cross over each other, that is, this 533 stochastic crosses over the blue line crosses over the red line down, then you know we are entering a downtrend, so you start selling from then on. Okay, so usually they will tell you to buy when it gets to this point and sell when it gets to this point. Sorry, let me use. So they tell you to buy at this point and to sell at this point. Excuse me. And then to sell at these areas. Okay? Alright, but I am going to tell you to do otherwise. Okay? Don't buy. You have no reason to buy in this market at all because we are in a certain a trending down market. We're in a trending bearish, heavy bearish market. So you don't want to sell, you don't want to buy in this market at all. It's very, very risky. Okay? So instead of buying, what you want to do is to maintain yourself. Okay? Ignore this part. Object list, remove that rectangle. Okay? So ignore this area and focus on this top only. Okay, so we want to focus on this top only. Now, what are we looking for at this top? We are looking for price to pull into or as close to this oversold area as possible. And at the same time, price is close to or at the 60 moving average, or even a little above the 60 moving average is fine. Okay, what are we looking for? Let me remove this rectangle too. Object list. Okay, so what we are looking for is this. Number one, price is okay. Number one, price is at or around the what is this called again? The oversold area, because we're in a sell market, right? So we're looking for the oscillators to pull up to this point. That's one. And then the next thing is we are looking for the oscillators to actually cross up or around, at or around that oversold area. That's one. The second thing is once the oscillators cross, check out where price action is at that time. Can you see that? So we look for the point that is closest to the 60 moving average that we have drawn when price crossed, and that will be either on this candle or this candle or this candle. So we would have taken our trade on either of these three candles. And which trade are we taking? We are doing a sell from here. So we would enter a sell anywhere around here. Sell entry. I'll make that green. Our entry point will be green. Okay, so we will be entering around here for a sell, and we want it to sell down. And watch what happens. Price sold for 160 pips before it pulled up again. Can you see that? Okay, so we have the first sell. It's running, and then price came all the way to this point and turned around again. Oscillator told us it has reached its peak of selling again. So what do? We enter another sell for this area where the oscillators and the price action crossed, which is somewhere around here. that. That's somewhere around here. Can you see that? So oscillators crossed, price is at or a little above 60 moving average. We have taken a second position here, right? And then price came down a little again. This is a very patient strategy. Trust me, just be patient with this strategy. You can actually bank a whole lot of pips with this strategy. Don't worry, I'll show you how. And then the price does the same thing for the third time at this point. Can you see that? Pulled up and crossed again. Let's say on this candle. Probably if you are patient and you had seen this occur, maybe you are not even watching, you waited for the cross to occur completely, then you would have been on this candle. So let's assume that you took your third trade somewhere around these two candles. Now we have 3 trades running and all of them are from the same area. And if you knew about support and resistance, you would know that this point is a strong support, right? So I will be setting my stop loss. I'm going to change this to gold. I use my markers. I use gold for markers, red for stop loss. Okay. All right. Now, for my first trade, usually I will put my stop loss a little above this point. That is a little above the what's it called? The moving average. But because I'm on a a large time frame, I don't want to do that. Instead of that, I will put my stop loss at above the last peak. This is this last peak here. That's where I will put my stop loss, above here. So my stop loss will be somewhere around here. And I would make my stop losses red, of course, naturally. That's red. Okay, so I'll make my stop losses red. So what are we looking at now? We have 3 trades. The first one took place here, stop loss was here. The second one took place here, stop loss would be at the same place, a little above that. And the third one took place here, and stop loss was pretty close to it too. We try to maintain a little above that point. We don't want to risk it too much. Some people might decide to push their own as high as this point. Well, but it's too much for me. So I would prefer to work with somewhere around here. Now, what did price do? The first time he tried, failed at the moving average. Second time he broke above the moving average, but he didn't actually beat that previous high. Can you see that? And then the third time he still broke above the moving average, but he still didn't beat that previous high. And what happens afterwards? You see that drop? So if we want to calculate our profit to this point now, I'll be looking at the first trade to give us 275 pips. The second trade would give us 300 pips. I'm not taking it all the way to this, I'm just stopping above that. And then the third trade to give us 320 pips. Now 275, 300 and 320. That's close to 1,000 pips on one single currency pair. Can you see that? On one single currency pair. And then it's still continuing. It's not ending. If you don't want to end this trade here, you can still keep it running, because do you see what's happening right now? There's a cross occurring while the price action is at the 60 moving average, telling you that you have another potential entry somewhere around here. You have another potential entry somewhere around here. Now, this is the beauty of this strategy, and that's why I love it so much. So this is there's another entry here, and this entry might actually end up, because I'm expecting this this pair to actually drop a lot further than that. Why did I say that? Let's zoom this down. Can you see? It has broken all previous supports. Do you see that? It has broken all previous support and it's just retesting this last support. The point where it is now is a retest of that support. After pulling down, it won't back up to retest that support. And after that, we're expecting a high drop to somewhere below this tail here. Okay, so now this is why, let's go with me. Can you see? You see what I mean now? You see what I mean now? If you know about chart patterns, you see that we have a head and shoulder here. The first shoulder up to this point, back to the neckline, head, neckline, second shoulder, now is at the neckline. If it breaks below this, we're expecting price somewhere around here. So if you took this trade and you kept this trade, and I'm sure from now on it's going to make a lot more faster move than it's been doing since. So you will be expecting something close to 2048 pips for each of those trades, about 2100 to 2200 pips for each of those trades if you maintain this trade as it is right now. So if I was on a long-term trade and I'm willing to leave this trade running for the next, this is on a daily chart, okay, this is on weekly now, but if I'm willing to leave this trade running for, let's say, the next 3-4 months, I'll be looking at close to 10,000 pips from these trades. 10,000 pips at one standard, one mini lot of 0.10 is $10,000. Yeah, $10,000. $10,000 in Nigerian currency is about 3.6 million. So if you earn 3.6 million for a 3 or 4 months job, it's not bad at all. Considering that you don't really have any, you don't have much into it. You just set the trade, enter the trade, and go your way and let it be. Okay, so you want to consider that. In fact, if you are watching this video anytime around 10th of September 2019, you might want to look at a long-term sell on AUD USD. I can bank on this. I can vouch for this trade. Alright, so now you understand how this works. Okay, so you know how this strategy works, and you know how to initiate it, and you know how to trade it. So there you are. Go ahead, make a difference, take the trades, and make me proud. I like to see your testimonies. I like to see your trade records. I like to see screenshots of trades that you took with this strategy. Like I said, I don't even know what to call this strategy. Yes, I'm just going to call it BluePipFX trend trade strategy. BluePipFX trend trade strategy. Okay, BluePipFX trend trade strategy. Wow, what a tongue twister. That's confusing. BluePipFX trend strategy. As simple as that. Okay, so just test it out, check it out, try it on the demo account, see how it works. You can tweak it, modify the stochastic setting if you like. You can change the parameters of the stochastic from 533 to whatever else, 1933, 16, 12, 12, whatever you want to do. Just test them out and see if it could actually be smoother. Let me change it to exponential. You see, exponential, well, seem a little bit smoother than the simple moving average. Let me edit this. Let me make this period 19. Okay. You see, you can actually get some pretty good results when you modify this a little, which means it was crossing initially when we were using 5. Now at 15, it's not crossing yet, meaning that it could actually still have a little more buy before it actually starts selling. So you see, so you could just modify, tweak around, see what happens, okay, and see if you get a better reading with higher periods on your stochastic. So this is my simple strategy. I keep testing some more. The more strategies I have, I'm going to put them up for you guys to test them out. This will be going up to the BluePipFX website. If you are not on the BluePipFX website, if you're not registered on the BluePipFX website, you are missing a lot. There's a whole lot there that you should be learning right now. So go right over to the www.bluepipfx.com, sign up for a free account. Don't worry, it's free of charge. Nobody's charging you anything. If you actually want more than just the training, then you may have to pay for some of that. But if it's just the training you are concerned about, just want to learn, then go ahead and sign up for a free service and learn from there. And if you want the signals as well, you know we have the free signals channel, so you can sign up and join the free signal channel. Just go to Telegram and search for @BluePipFX. Okay, go to Telegram, search for @BluePipFX. BluePipFX free, or just find BluePipFX and chat me up. BluePipFX, I'll respond if you send a message to BluePipFX at BluePipFX and ask to be added to the free signal room. You will be added to the free signal room. There's a VIP signal room, and you have to pay for that, of course, but a token is very, very small. So thank you for watching this, and I hope it makes you a better trader. And have a wonderful evening today. If you have any questions, chat me up on Telegram or WhatsApp. I think the WhatsApp number should be on the screen. If it's not on the screen, you can chat me up on Telegram anytime. Thank you once again. See you in the future.